Welcome, friends. This is Ramkumar bringing to you the 31st episode of my Educative series. This is a episode on the commentary of IPO of Shanti Gold International Ltd. The shares of this company, once allotted, will be listed in the Mainboard of BSE and NSE. The RTA for this company is Big Share RTA. This issue opens from 25th July 2025 and closes on 29th of July 2025. In terms of disclaimer, I am currently not registered with any regulator in India like RBI, SEBI, etc. Rest of the disclaimer you can read at leisure on the screen in front of you. Now we'll look at the issue details in full. So as we mentioned, the IPO is from 25 July to 29 July 2025. The anchor investors are allowed to invest on 24th of July 2025. The issue size is 1 crore 80 lakhs 96,000 shares of rupees 10 each. The minimum application is 75 shares, and this is a book building issue. So the base price is or lower cutoff is 189 rupees, and the upper cutoff or the upper price is 199 rupees. If you talk in terms of the minimum investment required, if you were to take the lower cutoff, then it is 14,175 rupees. If you take the upper cutoff, the minimum investment is 14,925 rupees. Now we will talk about the brief about the company. The registered office and the corporate office of the company is located in Mumbai, Maharashtra. The company is appointed Choice Capital Advisors Private Limited as the BRLM, that is Book Running and Lead Manager. The corporate office of the company, as we mentioned, is in Mumbai, Maharashtra. The IPO type is a 100% fresh issue. So there is no OFS or offer for sale portion involved in this IPO. This company was founded in 2003, and the IPO proceeds will be used towards the development of the company in terms of getting in higher business. As we go along, we will see in detail as to what are the objects of the IPO and who is going to manage the proceeds in terms of using the IPO proceeds. Now in terms of business, the company is mainly into the business, or majority of its business comes from 22 carat CZ casting jewelry. CZ is cubic zirconia casting jewelry. They also are into 18 carat, 20 carat and other such designed jewelry, but the major income comes from the 24 carat vertical. The main revenue disturbing factor or revenue earning factor, if you were to look at positively, is the price of gold. The price of gold has been going up continuously since last couple of years. That is one, and so which affects the raw material cost of this company. Second is the labor cost in designing and developing the ornament from the raw gold into a jewelry which can be used. So these are the two costs which are the major costs. So if you look at it from the percentage perspective, as we go along, we will see that the gold contributes to almost 98% of the usage of expenses. Now if you look at it from the revenue breakup point of view, the business outside of India, that is in US, Singapore, etc. For 2023 it was 8.22%, 24 it was 14.25%, 4.25%, and 25 it was 5.36%. So in short, you can say the company is dealing with countries other than India to the extent of about 5% of the business. In India again, about 70 to 80% of the business comes from South Indian states of Kerala, Tamil Nadu, the twin states of Andhra and Telangana, and Karnataka. The remaining states in India contribute to a very small percentage of 1%, 0.5%, etc. Now we'll talk about the objects of the IPO. The object is capital expansion. So basically the company is making a facility in Jaipur. So the proceeds of this IPO will be used towards that. So they have not capitalized the expenses they have already spent on this project to the extent of what it is ready till now. They will capitalize it after they receive the money through the IPO process. The working capital is the second expense item as far as the objects of this IPO is concerned. The third expense item is a debt repayment. So whatever debts are taken, some of them will be retired by them. The fourth is the general corporate expenses. Now they appointed Accurate Ratings and Research Limited as the agency to monitor the usage of the proceeds of the IPO. In terms of financials, if you look at the 3 years, 21-22, 22-23 and 23-24, the revenue is increased from 679.4 crores to 711.43 crores to 1106.41 crores. So you can see in the last 3 years, they've doubled in terms of the revenue. In terms of profit, it is 19.82 crores, 26.87 crores and 55.84 crores. In terms of total assets, it is 256.88 crores, 325.40 crores and 419.63 crores. So here again, they have almost doubled the assets from 256 to 409. If you look at the factors affecting the profitability or working of the company, the usual government issues will be there in terms of government changing laws related to the import of gold or policies related to import of gold, restrictions in terms of labor law. As this is a labor intensive industry, any change in the law by the state government or central government in terms of labor would be an issue. Similarly, with respect to the strikes and other such activities of the workers or labor could create issues for the company in terms of maintaining profitability. As far as policy goes, the policy on gold is an overriding policy which the company is very much involved with. One is the policy of Indian government, another is the policy of the government from where the gold is imported by the company. So the policies of the couple of governments will create an issue in terms of maintaining profitability. As far as taxes and tariffs are concerned, again here the taxes in India could affect the company positively or negatively depending on whether taxes goes up or down, whether GST goes up or down, and whether the entry of gold into the country is restrictive or it is free. Not in terms of cost but in terms of ease of operations. Tariffs also will create an issue if it is imposed either by India for something coming from a particular country from where they are importing gold or they are exporting gold jewelry, or in the country where the gold is imported from or gold is exported, the jewelry is exported to. As far as regulators are concerned, the company has been with so many regulators in the past, attached to so many regulators, that's Ministry of Corporate Affairs, GST, income tax, etc. Additionally, they will have to be attached also to the exchanges, that is stock exchanges, and the SEBI, which is a regulator for capital market. In terms of litigations, the company doesn't have too many litigations against itself or its promoter or promoter groups or directors or KMPs. But however, whatever little cases are there, if it goes against the company, this will hit the bottom line or the profitability of the company. Now, in terms of global growth, the company mentions that the gold industry or the jewelry industry will is a future-looking statement, will possibly increase by about 9.7% in the year 23 to 29. So that is in the 5 years. So here we need to see how good the predictions are from the gold perspective. Now the companies issued bonus in the past 1 year. Exactly to be right, it is about 6 shares for 1 share, and this was issued by virtue of the board deciding on it and the shareholders approving it on 9th of November 2024. So each share got them 5 shares. 1 share got them 5 shares. As we mentioned earlier, the working capital requirement for this company is very high for 2 reasons. One is the requirement of gold to make the jewelry. Second is the labor cost. The top 10 customers of this company contributed to 33.17% in 2023, followed by 36.43% in 24 and 34.49% in 25. So if you look at the top 10 customers, they're contributing to about 35% of the business. If you look at it in terms of suppliers, the top 10 suppliers, which is highly concentrated in terms of a few suppliers, it is 92.98, almost 93% in 2023, 93.5, so almost 94% in 2024, and 89.5, that is almost 90% in 2025. So to that extent, almost 95% of the supply is coming from the top 10 suppliers. This is a cause for concern, because if any supplier for some reason does not or is not able to supply, or that country from where the supplier is from not able to supply, there could be issue with respect to the company being able to continue making profits. Now, one more thing, important thing for this industry is a cyclical business. This thing, if you see in January 2023, it was 9.9%, followed by 11.818% in 24, followed by 10.98% in 25. So January gives almost 10% of the business. Second great month is August, which gives 12%, 13%, and 12%. So it's almost like 12 to 13%. So these 2 months combined, that is January and August together, will be giving between 20 to 25% of the business. The remaining months contribute to the remaining 75%. So since this is a cyclical industry, these 2 months needs to be accounted for or looked into. The reason could be that because of the high reliance on the South Indian market for the business, there could be a tilt towards January and August, where important functions like Pongal, Onam and all come about. Debt equity ratio, the company is having debt equity in terms of times 2.37 in 23, 2.14 in 24, and 1.6 in 25. So this is a little bit on the higher side, but it's fine because of the high requirements of capital for maintaining the working capital. Cash flow is something of a concern because it's negative as we speak. So if they do not rectify this cash flow from negative to positive, or at least make it more positive, there could be issues with respect to the company maintaining profitability. Presently, the operations are run from Andheri, that is in one location. Although they may be having offices across the country in maybe 5 or 6 states or more, the preparation or the manufacturing is done in that one Andheri location, which is in Mumbai. They are preparing one new location in Jaipur, which, as we mentioned earlier, is part of the IPO proceeds in terms of expanding the IPO proceeds. Now, for the growth of this company, between the year 23 and 25, they had a CAGR of 27.6, which is excellent in terms of growth. But the company claims that this may not be possible all the years. So this is something of a history which we need to take it with a pinch of salt. There are no long-term contracts with any of the suppliers or contractors, so they go along as and when they get, and they buy from the supplier who is able to supply at a lower cost or optimal cost. The raw material, as we mentioned earlier, is gold, and it contributes to almost 98% of the cost of operations. Now, one worrying factor about this company is the statutory audits. In the last 5 years, they have got some few changes done in terms of change of chartered accountants also. First chartered accountant retired in August 2nd, 2022. The second one retired in 23rd March 2024, citing various reasons. The third one is the present chartered accountant who is in operation. The statutory auditors in the meantime have given remarks over the last 3 years, which the companies explained to their the auditor satisfaction. However, it is there on record. As far as the quality is concerned, the industry has a very high standard on quality. So about 8 to 9% of the finished goods are being returned due to quality deficiency. So this is something of a concern, because the company has to reduce the rejections due to quality issues. else there could be hit on the profitability of the company, and also there could be some customers who may want to move to some other agency due to the low quality of produce. The non-compliances, as we mentioned, is there with almost many regulators like ESIC, gratuity, PF, IT, TDS, labor and welfare fund. Now they got two more regulators in terms of exchanges and SEBI. Hopefully the company will be able to ensure that all the requirements existing, the ones which they have mentioned in the prospectus, they have rectified, or they will be having processes to make it proper, will also be followed for SEBI and exchanges. In terms of capacity utilization, the company uses only about 50 to 60% of the capacity in the last 3 years. In 23, they have used 53%, 24, 50%, and 25, 58%. We have summarized the RHP and placed it to you for your perusal. This is meant to be purely an educational exercise to make the viewer aware of the pros and cons of the financials and the strengths and weaknesses of the company. In light of the above, there is no reference to the correctness or otherwise of the price on offer, prevailing grey market price, possibility of listing day earnings, etc. Should you find this video informative and educative, kindly pass it on to your friends and relatives. Please press on the like button and subscribe to this channel. Should you have any doubts, queries or suggestions, please write to me at ramkbharosay@gmail.com. Thank you.